Hello guys, my name is Daniel and I'd like to welcome you to my YouTube channel. Some call me Daniel Realms, the Realms FX, or you can call me Daniel Forex if you want. Yeah, whichever one suits you, you can go by that. Okay, so today in this video, I want to talk about market structure. Okay, and you can see that on the chart, I've carefully outlined some of the structures and stuff that we normally see in the market. Okay, so to begin with, okay, what is market structure? Now, simply put, market structure is the way price moves and forms patterns over time. It also helps traders understand whether the market is trending upward, downward, or moving sideways. Do you understand? So, when it comes to trading, there are three main ways that the market moves. It is either it's moving upwards, okay, or downwards, or it is moving sideways. So, when the market is moving to the upside, we call it, or when it's moving upward, we say that the market is uptrending. When the market is moving downward, we say that the market is what? Downtrending. And when the market is moving sideways, we say that the market is what? Consolidating, or it is ranging. Do you understand? Or it is correcting. Do you get it? So let's take a critical examination on the uptrending market. What are some of the key things to note when the market is trending towards the upside? Okay, so on the left side, this representation I've drawn over here is an indication that the market is what? In an uptrend. Okay. So when the market is in an uptrend, it tends to give you what? A series of what? Higher highs and higher lows. Higher highs and higher lows. Higher highs and higher lows. This is an indication that the market is trending towards the upside. How are you able to fully or clearly determine whether the market is trending? Because the market keeps breaking structure towards the upside. So you can see that after price gave us this higher high over here and created this higher low, price went past the previous higher highs level. Okay, so it broke beyond this point and then it gave us a new higher high. Higher high because this higher high is currently higher than this previous higher high. Do you understand? That is why it's called a higher high. Okay, so price pulls back, gives us a new higher low because this higher low is higher than this previous higher low. Do you get it? Thereby higher low. Fine. Then it keeps on breaking the highest structure again, and then what? It pulls back to give us a new higher low, and then the trend keeps on what? Continuing. So when you see that the market is giving you a series of higher highs and higher lows, it means that the market is trending towards the upside. Now, when the market is trending towards the downside, we tend to see a series of what? Lower highs and then what? Lower lows. Lower highs, lower lows, lower highs and lower lows. Basically, that is how the market moves when the market is what? In a downtrend. And just like how in the uptrend, it was giving us a break of the previous higher high and then giving us a new higher high. When it comes to the selling side or the downtrending phase or stage, you see that the market breaks beneath the lower low, pulls back to create the new lower high, and then breaks structure to give us a new lower low. Then it pulls back again, and what keeps on breaking the structure towards the downside. And that is how you are able to determine whether the market is in a downtrend. Do you understand? Now, the next phase or stage is when the market is what? Ranging or consolidating. So when we say that the market is ranging or consolidating, how does the market basically look like? Okay, so when the market is ranging or consolidating, it tends to move somewhat in a messy fashion. Okay, it's like it doesn't know where it wants to go, it just moves messy like this. Do you understand? So something like this, the market is just messy. So many a times traders don't like to trade in this phase or range when the market is consolidating. Okay, when the market is consolidating, traders tend to stay away. Now, one way whereby people tend to lose money is when they force to take trades when the market is ranging or consolidating. Clearly, you can see that there's no clear sense of direction. You understand? So, if you tend to want to force a trade in this phase, you're going to lose money. So it's best you wait for price to give you a break out of this structure over here. Then you'll be able to determine where the market is going to continue going. Do you understand? So many a times traders tend to draw a zone around this box, all right? Sorry, not box, around this range, this area. And then they tend to see if the market is gonna break out towards the downside or the upside. Do you understand? So if the market breaks down towards the downside, that is when they are able to capitalize on the pullback that happens, and then they continue trading towards the downside, because when the market was ranging, it gave us a breakout towards what the downside. Therefore, when it pulls back, it's going to retest and then what push down to continue the downtrend. Similarly, if the market breaks out of this range towards the upside, it is likely to come back and then what retest and then what continue the push to the upside. So anytime the market is ranging, it's best to wait for a break and retest to join in on the trade. I hope it makes sense. So basically, when it comes to market structure, these are the three main things to take note of. All right, these are the three main things to take note of: uptrend, downtrend, and then ranging. If you want to make money trading the forex market, it is best you trade with the trend. You understand? Trade with when the market is trending. Don't force to take trades when the market is ranging, because that is how more traders tend to lose money. Up, you get it? Yeah. So basically that is that. In the next video, I may go on the charts and then show us how the market moves when it is trending. And then in the next video, we may probably talk about break of structure or break in market structure, BMS or BOS, anyhow you want to call it. Then we'll just use that as a means to also go into the charts, and then we'll study how the market behaves. You understand? Yeah, so it's a boy Daniel Realms, Daniel Forex, anyhow you want to call it, or the Realms FX. And thank you for patronizing this video on my YouTube channel.